Hey everyone, this is Dimitri Pergamonic with MarketChameleon.com. In this video, we're going to cover the 5 different trading sessions. As a trader, it's important to understand the different trading sessions and what type of insights we could get from the markets looking at what's going on in those trading sessions. And in this example, we're going to use Microsoft. This is a table here with a list of the pre-market, the opening cross, regular trading hours, the closing auction, and after hours. Those are the 5 different trading sessions. Next to it, we have some important metrics. And below there, we're going to have a visual of the graphs of the price action and the volume. So let's first go over this table, and then we're going to discuss the difference for each trading session. Over here, we have the pre-market. We have the number of trades, the total volume in the pre-market, the VWAP price, which is the volume weighted average price. And next to it, we have some historical stats showing us the 20-day average volume in pre-market for Microsoft and today's relative volume, taking the volume for today, dividing it by the 20-day average to get a relative volume. And when we look at the pre-market session, that is stocks that are trading pre-market between 4 a.m. and 9:30 a.m. The markets can trade in pre-market hours. However, these are times when the stocks are less liquid, the spreads are wider, it's a little bit more dangerous to trade, and not everybody trades in the pre-market hours. For instance, passive trading does not happen in pre-market hours, such as VWAPs, stock buybacks, and etc. So when we look at pre-market trading, these are active traders who were already approved to trade in the pre-market hours. They are reacting to real-time data and information, and that is a glimpse to a certain trader cohort. So what we're seeing is the very active traders who are trying to reprice the stock based on their models, fundamental, technical, and they're giving us a certain indication what they perceive the news and information, and they're giving us that early indicator where they think the stock might open. Then we go to the opening auction. And the opening auction are people who cannot trade in the pre-market hours or who don't want to trade in the pre-market hours. They will send their orders to their brokers. The brokers will send those orders to the listing exchange. The specialist takes the buy orders that are queued up, the sell orders, and has a single price auction that matches the most volume at a single price. And that's really our earliest indication of where that price discovery is, and kind of sets the tone for the rest of the day. A couple things to look out for at the opening auction are the price and volume spikes, because a lot of times capitulations will happen at the open. For instance, if the stock market and the stock price has been experiencing repeated declines, at that point, you could see margin calls or people just capitulating and giving up and getting out when the market is down. So you'll see either a big volume spike and a big price decline, which could signal a capitulation. And that could happen going the other way. The markets are going up. There could be instances where there's short covering or forced buybacks, because if you're short and you can't locate the stock, or if you're losing on that short, your broker will go and send in an order to cover your position at the open. After the specialist opens the market, then we go into regular trading hours. And that's when all the market makers, specialists start quoting, and you see all types of traders in the regular trading hours. You're going to get your active traders, your passive traders, your VWAPs. You're going to get high frequency traders, options traders hedging their options trades. You're gonna get all types of competing models during those regular trading hours, and that's where you see the most volume, and that's where you kind of have the best price discovery because everybody at that point is participating. After regular trading hours, we do have a closing auction. It's similar to the open, except there is a difference. At the close, there's a special order type. It's not a regular limit order or market order. It's a limit or market order on the close. And that was created for a certain type of trader that needs to get the closing price. For example, mutual funds that receive orders throughout the day, and if they have to create more units or redeem more units, they need to do that on the closing price because mutual funds trade on net asset value that's determined by closing prices. And when we see a big spike in there, that could also give us an indication. If the volume is very high, much higher than average, it could give us an indication that either a lot of units were being created or redeemed on the day. Finally, after the close, we go again into extended hours, and that's after hours trading, similar to pre-market, where you do not have any longer the same rules, same protections, and you don't have the same liquidity during regular trading hours. You got to be careful when you're trading in those extended hours because markets are wider and much less liquid. If we come down here, this is a visual of this table, and we could see here on Microsoft's case from the previous day in the pre-market, it ticked down. Here's the VWAP price, and this bar tells us the range it traded in the pre-market. Then what happened is that it did tick up a little bit from that VWAP at the open on the opening auction, but it still traded, it looks like, in between that pre-market range. Then after the market opened, we could see that again, Microsoft weakened based on that VWAP. It did trade in a wide range, but the VWAP was lower than that opening price. And then at the close, it looks like it deteriorated even more, closed lower than that. And then after hours, it looks like it's trading flat with the closing price. Over here, we could take a look at the relative volume. We see how the price performed. How about the volume? And here we see broken down by each session. This is the relative volume. So it looks like it's been weak all across the board. What 0.4 means is that in the pre-market, it only traded 40% of the average daily volume in that session. And then you could see for each of these sessions, it's traded below the average. So that is a quick view of what went on in Microsoft for the 5 different trading sessions. Everyone, thank you for joining. Hope you enjoyed that video and hope to see you next time.